The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Wednesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got about 24 minutes to go until the opening bell, and you got markets accelerating to the upside. We get back that full acceleration of yesterday afternoon. You have the S&Ps accelerating to lower prices into the close, and we basically get it all back in terms of that acceleration. Not quite at the highs yesterday in terms of pre-market, but we are approaching intraday highs right now. In terms of where we were yesterday, you get the S&Ps up by 25 points right now pre-market. That's about 0.5% in the positive, trading at 52.90. NASDAQ 100, we're up by a similar 0.5%, 102 points in the positive, right where you were at about 2:45, 3 p.m. Eastern Time, before we had a little bit of a sell-off for the markets. NASDAQ 100 up by just more than 0.5% this morning. Dow up by 0.4%, 39,843. We got the Russell right now up by 13 points. That's about 0.6%, 2106. Bitcoin back above 71,000 as we speak. $1,600 to the positive, 71,030. You got crude this morning. We back off from yesterday's highs. We're trading at 81.11. You're negative by 51 pennies on crude. You jump over to gold. We got some action in the yen. We got some action in gold. Gold up by $5. We do pull back from the high we had at about 7:30 this morning. We were up at almost 22.20. We're trading right now at 22.05 in that gold contract. Silver negative by 5 pennies at 24.57. We jump over to notes and bonds. A little bit of higher price, lower yield. We're sitting at about 4.23%, 4.23%, the yield on that 10-year. We jump over to the volatility index with a 12 handle to kick off the trading session, 12.99. Tim Ord on with my dad last night. One of the ratios that he always looks at is the SPY per the VIX. And basically, if you think about it, right, folks, if the S&P is trading higher and you have the VIX at an elevated level, that's a little bit worrisome, because in theory, if the markets are trading higher, you should not have volatility premium going up as you have the market accelerating to higher prices. But that's not what's been happening in this market right now. You have the S&P making highs, you have the VIX pulling back. That's indicative of potentially a market that's going to higher price. And with that, this morning, we got the VIX trading at 12.99. Nice 12 handle on that VIX. Very little volatility premium in this market, as people are not paying up for insurance premium, when it seems like all expectations are that this market has pressure to the upside, if anything. We jump over to the dollar index this morning. As I mentioned, we got some action in the yen. You jump over to the dollar. Dollar right now up about 13 pennies. We put it back to the 15-minute, 104.42 on the dollar, as we got a little bit of dollar strength with higher price coming into the highs we had of last Friday, which was at almost about 104.50. You jump over to the dollar yen. That's where we're going to kick it off on the news. So we hit the highest price that we have seen, and then highest price means weakness when you're looking at the dollar yen. Okay, we almost hit 142. We haven't seen that level, I think, since 1990. Let's get over to it, man. And here we go. 34-year low. I had to check myself. I said 1990. I think that's what I read. 1990. My goodness, that would be almost 34 years. That's how it is. 34-year low. Pretty remarkable. As hopes for the Bank of Japan rate increases fade, they got one hike. First time it's happened since, 2007? And the market's saying, you know what? That might be all we get for a while, but officials over in Japan are saying, guess what, man? We're not going to stand for that. We're not going to stand for a weakness above this price level. We'll see where the market shakes out, man. There's only so much you can do when market forces are dictating where supply and demand meet. The Bank of Japan ended the 8-year stretch of negative interest rates last week. We're all aware of that if you're watching the program, if you're in tune with what's going on. The dollar briefly rose to a high of 151.97. I think that's what we just had, right? Yeah, there it is, 151.97. That high, which again indicates weakness in the yen, was at 10:30 p.m. Eastern time last night. You see a little bit of a sell-off this morning. We're back to 151.26. Great day to have our man Teddy Kegstad on. We talk to him every Wednesday at 40 past the hour. Look forward to that conversation for sure. We're going to talk to our man Kevin Hinks, of course, coming up after the next break. Always looking forward to that as well. But let's get into the yen. So the yen, partly undermined by comments by the Bank of Japan, on Wednesday, that the central bank would cautiously unwind its easy monetary policy as a virtuous cycle of rising wages and prices is expected to continue. Now, they ended the 8-year stretch of negative interest rates and unwound most of its unorthodox monetary policy easing policies last week, saying a new era of stable inflation is in sight in Japan. But guess what? That's not how the market pretty much took it, man. Now, what I want to get into here is this is what matters, and this is what we'll talk to our man Teddy about coming up at 40 past the hour. The yield gap, the yield gap, pretty remarkable when you look at it, between U.S. government bonds and Japanese government bonds remains wide, and that would be an understatement to put it lightly, folks, remains wide, making U.S. dollar-denominated assets appear more attractive and encouraging the so-called carry trade, when investors borrow cheap yen and sell the funds for dollars to be invested in higher-yielding securities. I think we've all become accustomed to this to a certain degree, but it is pretty remarkable when you look at the two interest rates side by side. The returns could be substantial, considering the 2-year U.S. Treasury yield, 4.6% we'll call it, and the 2-year Japanese government bond, 0.2%. Pretty remarkable when you put it in that context, man. You got two different yields, 4.6% in the U.S. and 0.2% in Japan. Well, where is money going to flow? Money is going to flow into dollars to chase a yield of 4.6%. Who would be trading dollars right now when you can get 4.6% with U.S. dollars and trading them in for yen where you can get 0.2%? Now, you got currency risk, That is the risk here, for sure. Yeah, but nonetheless, concerns about intervention have been fueled by a warning to speculators from Japan's Vice Minister of Finance for International Affairs, Masato Kanda. He said Monday that the yen's recent weakness was, quote, not in line with economic fundamentals, according to Japanese media reports, and added that there were clear speculations behind the developments. Bank of Japan Governor Ueda has said the bank will maintain accommodative financial conditions to support the economy and prices. The central bank's policy board is scheduled to release fresh inflation outlook in April at their meeting. Nonetheless, right? That story all over the news. This is the headline over there in Bloomberg. Amps up intervention threat as yen hits the lowest since 1990. The finance minister promises bold measures if needed. Yeah, and so you see a little bit of an acceleration away from that 152 price point. Pretty remarkable. You're talking about 1990, man. 34 years, the number in terms of the weakness in the yen, and that, of course, is correlated to dollar strength. If the yen is weak versus the dollar is strong versus the yen, and vice versa. 151.97 was the price point, beyond the level at which policymakers stepped in during October 2022. We're going to pull up the chart, but that's how it looks, and we'll pull it up on the Thinkorswim platform in a moment. And yeah, they basically rehash what we talked about from the Journal article. Given recent history, a breach of 152 could instigate intervention. So we'll talk to Teddy about this, man. Great day to have him on. The break of the previous high has accelerated the move. Yeah, and you take a look at that. We put it on a monthly basis. All right? Don't get caught up in 1990, 1970. Just take a look at where we are, man. All right? Pretty remarkable. Stay tuned, folks. We got a lot to talk about. We're coming back after the break with our man Kevin Hinks from Schwab Network. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This portion of the morning market kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We have the S&Ps up about 25 points pre-market. That's about 0.5% in the positive. NASDAQ 100 up a similar 0.5% right now, up 105 points, 18,554. To talk about some of the market action, let's jump over to our man Kevin Hinks. Folks, every trading day, 12 noon Eastern Time, fast market from the Schwab Network right here on Tiger TV. Your host, Kevin Hinks, Tom White. They're usually walking you through 3 hypothetical setups on trades, all of them using options. I've learned a tremendous amount myself over the years watching that program. I encourage you to check it out. Even if you don't trade options, you can learn a tremendous amount in terms of equities watching that program, and we'll jump into it. Kevin Hinks, good morning.
Good morning, Tom. Ryan. Interesting day yesterday. We spent most of the day on the upside, Tommy, and then sold off pretty hard at the end of the day. And failed rallies is something, a slighter amount Monday, much more pronounced on Tuesday. That'll catch the attention of traders as they look at this overall market. So a market that's going to open up anywhere from 0.5% to a little bit higher, traders will watch how this market performs throughout the day and watch for those failed rallies, because that one yesterday, that was a big one.
I agree, man. We got it up here on the Think and Swim platform. As you were talking about it, kind of that escalation began somewhere around 3 o'clock or so. You faded a little bit from noon, but boy, that was quite an acceleration from almost where we are right now down to about 52.65. And it is always interesting. We've talked about it before, whether you get earnings overnight sometimes. not always indicative of huge strength when you get the rally pre-market. We get to find out really where supply equals demand when the opening bell hits in about 10 minutes from right now. And we've reclaimed that acceleration that we got last night to lower prices. And yeah, we'll see if it can hold when we get that opening bell in about 10 minutes. Hey, I wanted to ask you about the yen. I know you're not necessarily, a Forex trader, but boy, you can't help but watch a price level. I had to check my math when I was starting the program, Kevin. 34 years. We have not seen that type of weakness in the yen. We got a bunch of gold traders, of course, out there. Gold, currency related, of course, but pretty remarkable what's going on in the yen over there. They got a 2-year yield that's under 0.2%. I almost have to emphasize that because it doesn't even make sense when you got the U.S. yield at, 4.6 something to that level. What do you think about what's going on in the yen? Pretty remarkable. You got a little bit of trying intervention. The officials there are not quite comfortable for obvious reasons with where it is. But have you been watching the yen? What do you think of that action over there? It's pretty remarkable. 1990, most of my life, which is pretty remarkable because I'm getting up there at that level. Pretty remarkable. What do you think about that yen action?
Yeah, the dollar-yen relationship is significant, and you mentioned 34-year low in the price of the yen. Why is that? Well, the Bank of Japan raised interest rates and then came out extremely dovish after they raised interest rates. And that, combined with a strong U.S. economy, is looking against the dollar-yen. Now, the Japanese finance minister came out and said they will take decisive steps in running to currency moves, but the market's not believing them because are they really going to intervene more than they already have? Some people are calling for a rate hike in October. People are calling for sooner than that. We're watching. The yen dollar pretty dormant for a long time, many years, and now it's back. Some of this that we've seen in the dollar the last several days, has been from a weak yen. But yeah, that relationship certainly worth watching.
It's pretty remarkable when I look at it on that chart. Not many times you talk about 34 years it's been since we've hit a price level, and you put it up there, and there it is. And yeah, well, pretty remarkable. We were at 75 in the yen in 2011. I mean, I know I'm going back. You were at a price point of about 104 in 2021. And then we know, boy, the world has changed dramatically since then. We got a ton of dollar strength. We got yields through the roof in the U.S., especially as the yen. Japan, one of the countries that just continues to struggle to raise those yields anywhere above the zero threshold, and the yen is showing that weakness. We'll see how it plays out. I appreciate the take. With that in mind, we've talked about it before, Kevin. A little bit of a slow week. We got one more trading day. Well, we got today, we got tomorrow. Markets closed on Friday. We get the important inflation data point on Friday with the markets closed, but a little bit of a low week in terms of whether it's earnings, economic data. We get the big point on Friday. But do you guys have, I know sometimes you guys talk themes, you talk equities. Do you have any individual equities or themes you're talking about on Fast Market coming up at 12 o'clock today, Kevin?
Yeah, this time on the calendar, we always start to do themes as we get in that gap between the end of earnings season and the start of first quarter earnings season. So yesterday was travel. Today will be home improvement. So we'll look at Amazon, like Folio will do presentation on Home Depot, and then we'll look at Lowe's. So I'm sure like Folio's presentation will cover all those stocks, but Amazon, Home Depot, and Lowe's today, Tommy.
And as you were saying it, I was jumping through the charts. Pretty remarkable strength across the board on those three equities, man. Amazon, $10 off the all-time highs that we had in 2021. What do we got? Lowe's just traded above 260. I think I got an all-time high at 263 in 2021. And Home Depot, just off those highs as well. We hit 420 at the end of 2021, and you're trading near 379 this morning. Kevin, I appreciate the time as always on a busy morning, man. We look forward to the program Fast Market at 12 o'clock today, and I look forward to talking to you tomorrow as well, man. You guys have a great day.
Thanks for having me on, Tommy. Have a great day.
Always a pleasure. Folks, check it out. 12 o'clock every trading day right here on Tiger TV from the Schwab Network Fast Market. As I mentioned, I've learned a tremendous amount myself watching Kevin and the team at the Schwab Network over the years. And as I mentioned, even if you don't actively trade options, folks, you can learn a an amazing amount in terms of how the market is pricing in expected moves, etc., on equities. Even if you're just trading equities, I encourage you to learn about options because there's so much knowledge that you can gain about what the market is expecting about equities within the pricing of options themselves. So check it out 12 o'clock today. And yeah, just as I was jumping it, how about those charts, right? Look at these charts, man. Home Depot. I mean, we all know the market's been on quite a tear since 2009, okay, when you back it up. But yeah, there's been a lot of equities that have underperformed, and these equities are not one of them, man. Home Depot, right up there near all-time highs. When you think about the housing market, when you think about the equity that people have in their homes and the ability to access that equity, a lot more difficult these days when, you can't refinance. You can, but you're doing it at a much more lofty level. Still, you have quite the acceleration with Home Depot pushing 382 this morning. You get the high of 420 out there, 420. Lowe's pushing 251. You get the high out there at 263. And of course, Amazon, its own animal. But yeah, well off those highs as well, man. From $80 up to 178.30 for Amazon shares. All right. It's going to be an interesting open, man. As Kevin put it, there has been some weakness and some fading of these market positive gains, and we're going to open right where we were yesterday before we sold off. Stay tuned, folks. We're coming back for that opening bell. Don't go away.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open. You're looking at an S&P up by about 27 points, trading at 52.93. You're positive by just more than 0.5%. But yeah, kind of a dicey area, right? Pretty much where we sold off from. You see that acceleration noon Eastern time yesterday. This is a 5-minute bar we're looking at. You're trading right where we were. You trail lower into 3 o'clock, and then, boy, it was quite a run, man. S&P's traded down about 25 points from that price level. You get it all back in the pre-market. But boy, sometimes what matters most is when that market is open, when supply equals demand. We'll see where the market goes from here. S&P is nonetheless up by about 0.5%. NASDAQ 100 up a similar 0.6% this morning, 18,556. We check in on Bitcoin, man. You can't hold Bitcoin down. Check it out. 625. And I talked about this yesterday, man. You know, you better be ready for some volatility in Bitcoin. That pullback from 74,000 down to about 60,000, that was merely a 382 retracement, folks, of the run that you had that began on January 23rd when you traded from 40,000 up to 74. You get a 382 pullback, and since then we've seen some strength. And remarkable, nonetheless, you're trading at 71,590 per a Bitcoin. Talk about it. We jump over to gold. Gold up by $8 this morning. 22.25 is the high out there from March 21st. And look at these spikes, man. And this is remarkable when you think about what's happened with the dollar index over that time. Okay, gold trading up another $8. You're trading at 22.07 right now for the gold contract. We jump over to silver. And look at the difference in silver, right, versus gold. Silver chopping around. This is a daily. Let's put it on a 3-year weekly, okay? Look at where we are. Let's put it on a monthly on silver. Quite the different chart versus gold, okay? Even if you take out the stratospheric run that silver had back in 2011 to $50 almost, you take a look at where gold is. That is some gold strength, man. 22.07, well above where you were in 2011, well above where we've been shopping around, which is the 2000 price point. A nice round number, our man Basil Chapman. And gold hitting 22.08. You put it back on the daily, 22.07. We put it back on the monthly, just from some context here. Where does that chart go back? It goes back to 2004. Well, I'll tell you what, folks. You know what this chart does not encapsulate? It doesn't even bring it back to as long as my dad's been writing his gold report. 2002. 2002. Absolutely remarkable. 22 years, folks. Congrats to my dad. Remarkable, man. He just released his 1,144th weekly issue of the Gold Report. 52 weeks. That's 22 years, folks. Started it in 2002. Pretty remarkable, right? In terms of, and boy, you know, timing is everything, man. And look at the run. Right? I mean, if you've been with us for a while, man, it's been a heck of a run. We've had some great runs even since the high in 2011 over that time, and this might be the beginning of that next run, folks. Now, what we got going on is we got a celebration. We got a sale for the 22-year anniversary, folks. You can save 35% off the monthly price. The key here is you just got to enter the promo code 22 years, okay? You enter that at checkout. You'll get 35% off the monthly price, and the best part about this deal, folks, okay, we don't do these types of deals basically ever. You can subscribe, you get 35% off the monthly price, okay? I think that's a savings of about $41.60 off the price, brings you down to, I think, $77 and change, something like that. I better get that price tag to be sure. Let me see. $41.65 minus $119 brings you down to $77.35 a month. Now, the kicker is that's even less than the yearly price. Okay, folks, you're paying monthly, and the best part is it stays with you forever as long as you remain a subscriber. We don't do these types of sales. We wanted to do something big. It's 22 years of the Gold Report, and it's a great time potentially for the gold market. So Tom showed my dad, some of his positions in the Gold Report last night on his program. You still get a 30-day money-back guarantee, folks, for new subscribers. So I encourage you, get in there, try out the Gold Report, enter the promo code 22 years at checkout. You'll see the savings reflected. And again, that savings, that's every month. That's not like you sign up and sometimes we'll do 50% off your first month for new subscribers, something like that, a nice promotion for new subscribers. No, you lock this in forever. As long as you remain a subscriber, you get 35% off the monthly price. It stays with your subscription. And you still get a 30-day money-back guarantee, folks, okay? So you can't go wrong. You can see the positions he's got in there that are active. You get the issue that he put out, of course, on Monday. You gain access to the archives, and you get the weekly issues going forward, and you still get a 30-day money-back guarantee. And if you decide to keep it, you lock in that 35% off savings for the life of your subscription. Check it out, folks. 22 years. Congrats to my dad. remarkable. 22 years. 1,144 consecutive weeks of publishing that gold report. Pretty remarkable. Yeah, pretty cool, man. All right, S&Ps. We're hanging tough, man. Right at that price point on the open. Now, what's going to be interesting here is, where does this market go ahead of the inflation data that we get on Friday? You know, I'm not sure we're going to get a huge move. It is interesting that you're going to get that data point when the market is closed. Not always the case. We're coming into Easter weekend. You got today, you got tomorrow, close for a Good Friday. We go home for Easter weekend. We come back on Monday. But, you know, I know Bloomberg's got a special going on. We're going to be closed on Friday, folks, okay? But the market is going to be paying attention, even though the exchanges will be closed. So it's going to be interesting to see how we run into that close tomorrow, with the anticipation that we get such an important economic data point, the Fed's preferred inflation gauge, out when the market is actually closed on Friday. So how do you prepare for that? All right, we jump around to some of the other news of the morning as we get a pullback, man. Check out the NASDAQ 100, right? That's a pullback for you. Kaboom. We just dropped almost 80 points right now. We're up by 0.25%. Let's see how some of those tech stocks are doing. You jump over to Apple shares. They're positive by 0.4%. Microsoft shares, yeah, they pull back from the open. Still positive by 75 pennies, 422.45. Jump over to Amazon. Well, there's a pullback for you. Amazon down about 0.3% right now. Let's see. They're going to be talking about Amazon, Home Depot, and Lowe's on Fast Market from the Schwab Network coming up at 12. Home Depot positive by 0.7%. Lowe's shares positive by about 0.6%. We jump over to Carnival. They were lower. Let's see how they're doing. Yeah, they're lower. So Carnival out with their numbers. Haven't dug into it yet. But yeah, they pull back, down 2.7%. They just came out with their numbers before the market, I believe. Is that when they did it? Yeah, probably 9:15. So it looks like they come out in line, but obviously the devil is in the details sometimes. Not sure the exact numbers, but you got Carnival trading a little bit lower this morning on their numbers. Let's see how their competitor, Norwegian, up about 1%. We check in on some of the active stocks this week. You got Boeing shares up about 0.9%. Right back to where you were before the news of their CEO out at the end of the year. The chairman, he's out in May. The head of the commercial planes division, he's out instantly. She, forget who was in that role. You jump over to United, that's been paying the price as well. Quite a rebound for them. United up by 1.8% so far this morning. Delta up by 1%. We check out JetBlue. JetBlue shares up by 0.2% so far this morning as this market holds on. You actually get the Dow catching a nice bid, 39,952. So what happens? We get a little bit of a NASDAQ 100 pullback. You get a Dow spike higher on the open, and we check in on the dollar-yen as we gear up for our man Teddy Kegstack coming up after the next break, man. Great day to have him on. We'll talk some dollar-yen. We'll talk some gold. We'll talk some currencies. We always talk some crude as well. You get the yen, 151.30 as we talk to our man Teddy coming up after the break on the heels of the yen. The weakest since 1990. Now, it's so remarkable, folks. I was very fortunate. Went to an amazing high school in Dedham, Massachusetts. If you're looking for an amazing high school for your children, Noble and Greeno, Dedham, Massachusetts. I had the privilege of taking Japanese in the years 1992 to 1998. Went over there at a period of yen weakness. We're coming back with Teddy, folks. Don't go away.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of Basil's educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We get the S&Ps holding on to gains right now. We're up by 25 points. NASDAQ 100, we're positive by about 50. And as we do each Wednesday, folks, at 40 past the hour, we talk to our man, Teddy Kegstad. Great day to do it. If you haven't checked out the Tiger Forex report, folks, with everything going on, with Forex right now, with the yen, with yields, with commodities, I encourage you, while we're talking to Teddy, you're listening to our interview, head on over to the front page of TFNN. Under the newsletter tab, you'll find Teddy's outstanding weekly newsletter, the Tiger Forex Report. You can sign up for that. You get a 30-day money-back guarantee. You gain access to the newsletter, folks. Check it out. And, boy, it's a great day to talk as we're talking about the yen with weakness we have not seen. I had to check my math, Teddy. 1990, man, 34 years. Good morning, Teddy.
34 years ago, and in about another month is when I first placed my first trade, and I'll be 35 years in the business also in about another month and a half. So I remember that time.
Experience and history, as we know, man, sometimes you can't match that type of experience when you live through some of those deals. Yeah, let's jump into it, man. Of course, you got a little bit of commentary. We've been talking about it. You've had some great calls out here. And, yeah, we got a little bit of a pullback. We're sitting, I got the chart up here, 151.33. We hit 151.97 earlier today, of course. Bank of Japan officials not quite comfortable with that level, but, you know, they aren't the say-all of the market sometimes. What do you think about this price action, man? Pretty remarkable.
Well, you know what? It's very interesting. You know, you hear all this talk about, you know, it's been 34 years since they've been at this level. No one's talking about the interest rate dynamic. Back then, our interest rates were very, very much higher than they are now.
Okay.
Which is, no one's even talking about that. And it's interesting that, you know, people are wondering, you know, the Bank of Japan recently just did their first move in, you know, forever to begin with. What are they going to do? You know, the 150, the Tiger Forex report now for months, I've had this line literally at 150. It's the BOJ threshold line, you know, and we're trading above it. And this is after central bank intervention on their part. And we know that ours is not going to happen at probably at least until June, you know, and unless that happens, it's going to be very hard for us to get really too far below the 150 level right now with dollar strength. And it's kind of odd that this, like, you know, it's very interesting right now that we're looming on a rate cut, and dollar strength right now is looming there. And, you know, usually in times of trouble and stuff like that, the bonds are flight to quality, and, you know, so is the US dollar. You know what's interesting? So is the Swiss. the one currency that's breaking out right now that no one's talking about is the U.S. dollar Swiss. Granted that right now the yen U.S. dollar relationship is at a very high threshold and definitely where they don't want it to be, but no one's even looking at the fact that the one currency that's really breaking out is the U.S. dollar Swiss. And that's where I think that these currency dynamics, the coil is winding right now. If you look at like interest rates right now between especially the 10 and the 30 year on our end, we've been in a range trade since the 1st of December. We hit the higher end of our range right before the first of the year, and we've been bobbling off the lower end for the last month and a half, and we're not going anywhere, and we talked about this before already, that we've definitely have at least a quarter point factored into the market, so what does this dynamic mean? It means that unless there's any real big intervention on the Japanese part, they're most likely we're pretty much going to stay around these levels. Can we have a sell-off? Absolutely. We would be due for a profit-taking correction without a doubt, but it's very hard to see how we're not going to stay bobbling around this somewhere around 150 level probably for the next few months at the very least, especially with oil at the $80+ level as well. Like the only reason I could see that the yen is going to get back to like 145 or lower would mean that we're going to see oil back in the 70s, and we're also going to see us having at least one rate cut under our belt. So until that happens, I would say get used to these price levels and maybe even see a spike. Now, I'd be careful being on the long side also. How far can we go to the upside? Well, if we're on a rate cut edge, odds are we're buffering that ceiling to begin with, unless there's any real reason for U.S. dollar strength, which there isn't, I'd be careful, buying into these highs. I think that if you're buying dips between 148 and 150, looking for a spike up to 152, 153, that's a great place. I'd be very careful buying up at the 153 level, though.
It's a great point, man. I appreciate the take. And for those listeners, even if they've heard it once or twice, Teddy, I love, and it's something that stayed with me for so long when you first had the conversations about the fundamental nature of, commodities, particularly crude, and the U.S., and then comparatively to something like the yen. When you talked about how crude could play into that, could you just give those listeners out there just one more quick explanation of how, whether it's the U.S., we're a producer now, and how that plays into things when you talk about how the crude price could impact particularly the U.S. dollar yen?
Oh, absolutely. So the U.S. is one of Japan's major suppliers to begin with. So the price of oil right there has a fundamental relationship between us and them. Also, the petrodollar, oil has been basically priced in dollars globally for decades now. It's starting to turn, the euro and other currencies as well. But no matter what, when the Japanese buy oil from us, they're converting yen to dollars. So there's a currency risk right there. There's a currency cost, if you will, besides the fact that there's the price of oil. And the thing is that Japanese don't have oil, and they're one of the biggest economic manufacturing engines on the planet. They're an island, and they have such an output. If oil runs in short supply, the machines turn off, and it's just that simple. So their economy is really based on what their output can be, and their output is obviously commodity driven. It's not just the materials to make things. You need the materials to have the machines running. Without the machines running, there's no products, correct? So, and that's where oil becomes a very big fundamental. It's also one of the reasons why, World War II, how did we, stranglehold the Japanese? We had the embargo, we cut off the oil supply, and that's, obviously how, Pearl Harbor happened and things like that, but we all know how history ended with that part, but oil was a big part of it, so think about it. If oil could be used for war, it's also an economic thing, and especially when you have currency risk at the same point, and with central banks that are on the opposite fence. You have the Bank of Japan that, well, by no means are they hawkish, just because they finally raised the rate, from 0 to 0.25%, but we're also, just because we're going to start maybe cutting, easing a little bit, it doesn't mean that we're dovish. It just means that after raising a bunch, we're retracting a little bit, and that relationship is how the U.S. dollar yen really and I love that relationship. Like of all the currencies, you have that dynamic. I always say the best indicator is the markets. Oil is a great indicator for what you do with the U.S. dollar yen relationship, no matter what the trend is. You can buy dips or sell rallies based off of that those commodity trends.
I appreciate the explanation because I think it taught me so much. And like you say, it's such a great example, but in terms of supply and demand, currencies, what's driving the action, and I'm sure it applies to more than just that currency, but I appreciate that, man. Teddy, that was a quick 9 minutes, man. I appreciate it. We'll talk to you next week, brother.
Thank you, Tommy. Take care.
Thanks so much.
Happy
Folks,
Easter.
Check out that Tiger Forex report. You too, Teddy. Have a great Easter, man. We'll be back to finish up the show.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of Basil's educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Appreciate that explanation from Teddy. If you haven't checked out the Tiger Forex report, folks, check it out. Don't forget about the gold report sale going on. You can save 35% off the monthly price. You lock in those savings forever. Still comes with a 30-day money-back guarantee. You got gold right now. What are we pushing? Up $13. You get you a little bit of a lift. $22.12 on that gold contract. And yeah, my dad, Tom, he showed a couple of the equities in the gold report right now, folks, last night on his program. You can always check out the archive on our YouTube channel. Just search TFNN. I encourage you to subscribe to our channel, like it, get those notifications as well. And boy, some of those equities, you start approaching lofty levels in the gold contract, and yes, some of those equities are really going to rock. My dad, he'll be interviewing Fred Ernest on the program this afternoon, coming up between 3 o'clock and 4 o'clock today. I believe that interview's at 3:15 today. Fred Ernest from Vista Gold. Don't forget to check that out. And yeah, gold trading at 22.11. And we finish up the program with a little bit of John Stewart, he used to have his moment of Zen. We'll call this the moment of what the heck is going on. So I live in Lakeland, Florida right now, folks, okay? So especially pertinent to where I am. And you got facial recognition cameras getting installed in downtown. Downtown Lakeland is not a crime-ridden area, okay? Crime happens everywhere, folks, so this is not some area that needs special attention in terms of violating your rights. And you have facial recognition cameras being put into downtown. And supposedly what's going on is that they're talking about everybody here, okay? So it's tracking and identifying people in real time. It's sending notifications. What's absolutely bonkers here is that the people who are going to have access to this data include the owners of the properties that it's getting placed on, which I found so remarkable. So it's not even just officials, okay? With access to it is going to be the Lakeland Downtown District Development Authority, okay, the city, the parking staff, and the owners of the buildings. And here's the part I'll leave you with, okay? They always say if you're not doing anything bad, you don't have anything to worry about. That is the quickest way to erode your rights, folks, okay? And you have the executive director, Julie Townsend, saying if you're behaving well, you should have no problems. That's what they say when they violate your rights, folks, okay? Unreasonable search and seizure. You don't have to be behaving well to make sure that your rights aren't violated. Pay attention to this stuff because it's going to keep happening. It's happening in my hometown, and hopefully people stand up for themselves. Thanks so much, folks. Stay tuned. Basil's up next. Have a great Wednesday, folks. We'll see you tomorrow.